Welcome to our deep dive into personal finance. We're cracking open Tony Robbins' money, master the game, to see what we can learn.
Sounds good.
You shared that you're looking to get a better handle on your long-term financial planning. And this book is packed with advice from billionaires and financial gurus. So let's see what nuggets of wisdom we can unearth.
You know, one of the things that really struck me about this book is how it doesn't sugarcoat the realities of retirement planning today.
Yeah.
Like, in today's world, Robbins paints a pretty stark picture. Pensions are fading, and the current system as well. It's a bit of a minefield.
Yeah, some of those statistics he throws out there are pretty alarming.
Right.
Like, did you know that 75% of Americans could end up outliving their savings?
It's crazy.
And Social Security alone won't exactly fund a lavish retirement lifestyle. It makes you realize that we can't just coast along hoping for the best.
Exactly. And that's where the book's core message comes in. We need to become savvy investors. Robbins argues that instead of passively relying on traditional methods, we need to take control of our financial futures.
So how do we do that? I mean, the world of investing can seem pretty daunting, especially with all the jargon and complex strategies.
Well, that's where Robbins does a great job of breaking things down.
Okay.
He starts by debunking some common investment myths, like the idea that you need a ton of money to get started. He actually shares some really inspiring stories of people who started with very little and achieved incredible success just through consistent saving and smart investing.
I like that story about Theodore Johnson, the UPS driver who became a millionaire.
Exactly. He never made more than $14,000 a year.
Wow.
But by diligently setting aside 20% of his income and investing it wisely, he amassed a fortune.
That's incredible.
It's a powerful reminder that it's not about how much you earn, but about developing good financial habits and making your money work for you.
So what are some of the other myths Robbins tackles? I know he's pretty critical of the financial services industry.
Oh yeah, he doesn't hold back. He really goes after those high fees associated with mutual funds. You know, those seemingly small percentages that can actually eat away at your returns over time?
Yeah.
He calls it putting lipstick on a pig, because the advertised returns often don't reflect what investors actually end up with.
That's a pretty vivid image.
Yeah.
So what does he suggest as an alternative?
Well, he's a big proponent of index funds.
Okay.
Which are basically like baskets of stocks that track a specific market index. They tend to have much lower fees than actively managed mutual funds, and historically they've performed very well over the long run.
It makes sense. You're essentially betting on the overall market rather than trying to pick individual winners and losers.
Right. And he even suggests using online tools to analyze your current mutual fund holdings and see how much you're actually paying in fees.
Oh, wow.
It can be a real eye-opener.
So being aware of those hidden costs is crucial. But what about retirement accounts like 401k? Aren't those considered a safe bet for retirement?
Well, Robbins has an interesting perspective on that. He believes that while 401ks can be a valuable part of a retirement plan, they're often not enough to achieve true financial freedom.
Okay.
Especially given the potential for high fees and limited investment options within those plans.
So what does he suggest people do instead?
He advocates for diversifying your retirement savings beyond just your 401k.
Okay.
He's a huge fan of Roth IRAs, especially for younger investors who are likely to be in a higher tax bracket later in life, and for those with higher incomes who exceed the Roth IRA contribution limits. He even highlights a strategy called the backdoor Roth IRA.
Wow, that sounds pretty complex. Maybe we could dive into the specifics of that a little later. But first, I'm curious about this concept of a freedom fund that Robbins keeps talking about. What exactly is that?
It's essentially a dedicated savings account that you consistently contribute to, with the goal of building enough wealth to cover your essential living expenses without relying on a job.
Okay.
Think of it as a financial safety net that gives you the freedom to pursue your passions and live life on your own terms.
That sounds pretty liberating. But how much should people aim to save in their freedom fund? And where should they invest that money?
Robbins emphasizes that the amount will vary depending on your individual circumstances and lifestyle, but he suggests starting with a goal of saving at least 10% of your income and automating those contributions so you don't have to think about it.
Yeah, makes sense.
As for where to invest it, he believes in a diversified approach that includes a mix of stocks, bonds, and real estate.
That makes sense. Don't put all your eggs in one basket, right?
Exactly. Diversification is key to mitigating risk and potentially increasing returns over time. Robbins even delves into a specific asset allocation model called the all-seasons portfolio, developed by billionaire hedge fund manager Roy Dalio.
Oh, I've heard about that. It's supposed to be designed to weather any economic storm. So how does it work?
It involves strategically allocating investments across 4 key asset classes: stocks, long-term bonds, intermediate-term bonds, and gold. The idea is that by holding a mix of these assets, your portfolio will be better positioned to perform well, regardless of whether the economy is experiencing inflation, deflation, growth, or recession.
So it's like having a financial all-wheel drive system.
Exactly. Robbins provides historical data showing that this portfolio has generated positive returns even during major market downturns, making it a pretty compelling approach for long-term wealth building.
That's pretty impressive. But I'm also intrigued by this section of the book, where Robbins interviews all those financial giants. It's like getting a peek behind the curtain into the minds of some of the most successful investors in the world.
Oh yeah, The Billionaire's Playbook is a fascinating read.
Right.
He interviews legends like Carl Icahn, known for his aggressive investing style, David Swensen, who transformed Yale's endowment into a powerhouse, and Jack Bogle, the pioneer of index funds. It's a treasure trove of insights into their investment philosophies, strategies, and lessons learned.
Okay, well, I'm definitely going to have to dig into that section. But before we get completely lost in the world of billionaires, I want to circle back to something you mentioned earlier about annuities. Robbins seems to have a more nuanced view on those than some other financial experts.
You're right.
Yeah.
He distinguishes between variable annuities, which he cautions against due to their high fees and complexity, and fixed indexed annuities, which he sees as potentially valuable tools for generating guaranteed lifetime income.
So could annuities actually be a good option for some people in retirement?
He argues that for those concerned about outliving their savings, they can be a way to create a steady income stream that you can't outlive. Essentially like creating your own personal pension.
Okay.
Of course, it's important to understand how they work and choose the right type of annuity for your individual needs.
That makes sense.
Yeah.
It seems like there's a lot to consider when it comes to annuities. But maybe we can unpack that more in a bit. Right now, I'm really curious about this interview with Paul Tudor Jones, the hedge fund manager who's supposedly a master at predicting market trends.
Wow, that's a great one. Jones shares some incredibly valuable insights on risk management, the importance of having a well-defined trading strategy, and how to protect your capital during market downturns.
Yeah.
He stresses the need to have a stop-loss strategy to limit losses when trades go against you, and the importance of staying disciplined even when emotions are running high.
It's a crucial point, especially in a volatile market.
Oh.
I know I've certainly made some emotional investment decisions that I later regretted.
We all have, and that's where the psychological aspect of investing comes in.
Yeah.
Robbins dedicates a significant portion of the book to exploring the psychology of wealth,
Oh, okay.
arguing that our beliefs and mindset often sabotage our financial success.
So it's not just about knowing the right strategies, it's also about having the right mindset.
Exactly. Robbins believes that we need to identify and challenge those limiting beliefs about money and adopt a mindset of growth and opportunity.
It sounds like that mindset shift is a recurring theme throughout the book.
It definitely is. And Robbins doesn't just talk about it in the abstract. He provides actionable steps for cultivating a wealth-building mindset.
Okay.
He emphasizes things like focusing on what you can control, taking massive action, and developing a relentless commitment to learning and growth.
That's great. So it's not just about theory. It's about giving people the tools they need to actually change their behavior and achieve their financial goals.
Exactly. And he also stresses the importance of setting clear goals and developing a plan to achieve them.
Okay.
He argues that without a clear vision and a plan of action, it's easy to get sidetracked and fall back into old patterns.
I know I'm guilty of that. It's so easy to get caught up in the day-to-day and lose sight of the bigger picture.
We all are, and that's why having a written plan, a roadmap for your financial future is so important. It helps you stay focused, motivated, and on track even when things get tough.
Okay, so we've talked about the importance of investing, debunking common myths, and developing a wealth-building mindset. But what about the emotional side of money?
You know, that's something Robbins really delves into as well.
Okay.
He argues that money is often tied to our deepest fears and insecurities, and that understanding those emotional triggers is crucial for making sound financial decisions.
So it's not just about the numbers, it's about understanding our own psychology around money.
Precisely. He encourages readers to explore their own personal relationship with money and identify any limiting beliefs or negative patterns that might be holding them back.
I can see how that would be really valuable. I mean, We all have baggage around money, right?
Absolutely. And Robbins provides some really insightful tools and techniques for addressing those emotional blocks and developing a healthier, more empowered relationship with money.
This is all starting to sound like it's about so much more than just getting rich.
You're absolutely right.
Yeah.
Robbins emphasizes that true wealth encompasses not only financial success, but also health, relationships, and a sense of purpose. He encourages readers to invest in their physical and mental well-being, nurture their relationships, and find work that aligns with their values and passions.
That's a really holistic approach.
Yeah.
It's not just about accumulating wealth, it's about creating a fulfilling life.
Exactly. And he also stresses the importance of giving back and using your wealth to make a positive impact on the world.
Good.
He argues that contribution is one of the most rewarding aspects of wealth, and that true happiness comes from making a difference in the lives of others.
It's inspiring to hear him talk about the power of money to do good in the world.
It definitely is. And Robert provides some practical advice on how to incorporate philanthropy into your financial plan, whether it's through charitable giving, impact investing, or starting your own social enterprise.
This is all great stuff. But I'm wondering, how do we actually put this all into action? I mean, it's one thing to read about these concepts, but it's another to actually implement them in our own lives.
Well, that's where Robbins' 7-step plan for achieving financial freedom comes in. He lays out a clear roadmap for taking control of your finances and building a future of abundance and security.
So it's like a step-by-step guide for going from where you are now to where you want to be financially.
Exactly. And each step builds upon the previous one, creating a solid foundation for long-term success.
Okay, well, I'm definitely eager to learn more about those 7 steps. But I think we've covered a lot of ground already in this first part of our deep dive.
We have. We've talked about the need to become savvy investors, debunked some common investment myths, explored the importance of a freedom fund and diversification, and even touched on the psychological aspects of wealth.
And we've only just scratched the surface. There's so much more to uncover in Money Master the Game.
Absolutely. We've still got those billionaire interviews to delve into. And of course, we need to unpack those 7 steps to financial freedom.
I'm already feeling more empowered and informed.
Me too.
Yeah.
It's amazing how much valuable information is packed into this book.
Well, I guess that's what makes it a classic.
It certainly is. And I'm excited to continue our deep dive and see what other gems we can unearth.
Me too. Stay tuned for part 2, where we'll delve deeper into those billionaire interviews, unpack those 7 steps to financial freedom, and explore some even more advanced strategies for building lasting wealth.
All right, ready to dive back into those billionaire interviews? Remember, we're trying to glean insights that can help you on your path to financial well-being.
Absolutely. It's like having a mentorship session with some of the greatest financial minds of our time, except without the hefty consulting fees.
Exactly. And these aren't just theoretical discussions. These billionaires share real-world examples of their successes and failures, their strategies and decision-making processes. It's incredibly valuable.
So who should we start with? Any favorites that really stood out?
Well, I think Carl Icahn's interview is a must-listen. He's known for his aggressive investing style.
Okay.
Some even call him a corporate reader.
Oh, wow.
He buys large stakes in companies he believes are undervalued, and then uses his influence to push for changes that will increase shareholder value.
So he's not afraid to shake things up a bit.
Not at all. He's a master negotiator and a shrewd businessman. He shares some incredible stories about his battles with corporate boards and how he's managed to unlock billions of dollars in value for himself and other investors.
I can imagine those boardroom meetings getting pretty intense.
Oh, I'm sure they do. But he also makes a compelling case for shareholder activism and how it can actually benefit companies in the long run by forcing them to become more efficient and accountable.
Interesting. So it's not just about making a quick buck, it's about pushing companies to perform better.
Exactly. And he emphasizes the importance of doing your homework, understanding the businesses you're investing in, and having the courage to stand up for what you believe in.
It's inspiring to see that level of conviction.
Sure.
Okay, so Carl Icahn is all about shaking things up in the corporate world. What about some of the other billionaires? Any contrasting approaches or philosophies?
Well, David Swensen, who managed Yale's endowment for decades, offers a very different perspective. He's a champion of long-term investing and diversification.
You mentioned him earlier when we were talking about asset allocation.
Exactly. He believes in spreading your investments across a wide range of asset classes, not just stocks and bonds, but also real estate, private equity, and even timber.
Wow.
He argues that this approach helps to mitigate risk and smooth out returns over time.
So it's kind of like a financial buffet, a little bit of everything.
Exactly. And he's got the track record to prove it works. Under his leadership, Yale's endowment grew from a modest $1 billion to over $30 billion, even through multiple market downturns.
Wow, those are some impressive results. It seems like his strategy is all about playing the long game and not getting rattled by short-term market fluctuations.
Absolutely. He emphasizes the importance of patience, discipline, and a long-term perspective. He's not trying to time the market or chase the latest hot stock. He's building a portfolio that's designed to weather any storm and generate consistent returns over decades.
That's a really powerful message. Okay, so we've got the aggressive activist investor and the patient diversifier. Who else is on our billionaire roster?
Well, we can't forget Jack Bogle, the founder of Vanguard and the creator of index funds. He's a legend in the investing world.
Oh, right. He's the one who believes in keeping it simple and low cost.
Exactly. He's a huge advocate for index funds, which track a specific market index like the S&P 500. They tend to have much lower fees than actively managed mutual funds, and historically, they've performed very well over the long run.
I remember Robbins making a big deal about the impact of fees. Those seemingly small percentages can really add up over time.
Absolutely. And Bogle was way ahead of his time in recognizing that. He believed that most investors are better off keeping it simple, minimizing costs, and letting the market do its work.
So it's about being a patient participant in the market rather than trying to outsmart it.
Precisely. He argues that most people who try to beat the market end up underperforming it, largely due to high fees and emotional decision-making.
That's a humbling thought. Okay, so we've got three very different approaches represented in these interviews. But what about some common threads or takeaways that we can apply to our own investing?
Well, one thing that all these billionaires emphasize is the importance of having a clear investment strategy.
Okay.
Whether you're an aggressive activist investor like Icahn, a long-term diversifier like Swenson, or an index fund champion like Bogle, you need to know what you're trying to achieve and how you're going to get there.
So it's about being intentional and having a plan, not just throwing money at random investments.
Exactly. And that plan should be based on your individual circumstances, your risk tolerance, your financial goals, and your time horizon.
That makes sense.
Yeah.
And it seems like they all emphasize the importance of discipline and patience.
Absolutely. They're not getting swayed by short-term market fluctuations or emotional impulses. They're sticking to their strategies, staying focused on their long-term goals, and letting their investments compound over time.
It's about playing the long game and not getting distracted by the noise, right?
Exactly. And I think another key takeaway is the importance of continuous learning. These billionaires are constantly reading, researching, and talking to other experts. They're never satisfied with the status quo. They're always looking for ways to improve their understanding of the markets and refine their investment strategies.
So it's about being a lifelong student of investing.
Absolutely. And that's something we can all do regardless of our net worth. There are so many resources available today: books, articles, podcasts, online courses that can help us deepen our knowledge and make more informed investment decisions.
That's a great reminder. We don't need to be billionaires to have access to valuable information and education.
Exactly. And remember, even these billionaires have made mistakes along the way. They've had their share of losses and setbacks, but they've learned from those experiences, adapted their strategies, and ultimately come out stronger.
So it's not about being perfect, it's about having the resilience to bounce back from setbacks and keep learning.
Precisely. Investing is a journey, not a destination. And the more we learn, the better equipped we'll be to navigate the ups and downs of the market and achieve our financial goals.
Okay, so we've gleaned some great insights from those billionaire interviews. But I know Robbins also lays out a 7-step plan for achieving financial freedom. I'm ready to dig into that roadmap.
All right, let's unpack those 7 steps. They build on everything we've been discussing so far, providing a clear framework for taking control of your financial future. Step 1 is all about making the decision to become an investor, not just a consumer. It's about shifting your mindset from spending to saving, from being reactive to being proactive with your money.
So it's that crucial first step towards taking ownership of your financial destiny.
Exactly. Robbins emphasizes that this decision is fundamental to everything that follows. It's about making a conscious choice to prioritize your financial well-being and start building a future of abundance and security.
It sounds like a mental shift as much as anything else.
Absolutely. It's about changing your relationship with money and seeing yourself as an investor, someone who is actively building wealth rather than simply spending what they earn.
Okay, so once we've made that decision to become an investor, what's step 2?
Step 2 is about saving automatically. It's about setting up a system where a portion of your income is automatically diverted to your savings and investment accounts before you even have a chance to spend it.
Oh, I've heard about this. It's like paying yourself first.
Exactly. Robbins argues that this is one of the most powerful strategies for building wealth because it takes the emotion and willpower out of saving. You're essentially making it a non-negotiable part of your financial plan.
So it's about automating good financial habits.
Precisely. And he suggests aiming to save at least 10% of your income, but ideally more if you can. He even provides specific strategies for finding those extra dollars to save, like negotiating lower bills, cutting back on unnecessary expenses, and finding creative ways to boost your income.
It sounds like it's about being proactive and taking control of your cash flow. Okay, so we're saving automatically. What's next on the roadmap to financial freedom?
Step 3 is where things start to get really interesting. It's about discovering the hidden fees that are robbing you blind. Robbins pulls back the curtain on the financial services industry and exposes all those sneaky fees and expenses that can eat away at your returns over time.
Oh yeah, we talked about that earlier. He's pretty critical of the mutual fund industry and those high expense ratios.
Absolutely. He encourages readers to take a close look at their current investments and see how much they're actually paying in fees. He even recommends using online tools to analyze their mutual fund holdings and compare them to lower-cost alternatives like index funds.
It's amazing how much money we can lose to fees without even realizing it.
It really is. And Robbins makes a compelling case for being a fee-conscious investor and understanding how those seemingly small percentages can add up over time.
So it's about being an informed consumer and making sure our money is working as hard for us as possible.
Exactly. And he even provides specific strategies for minimizing fees, like negotiating lower commissions with your broker, using discount brokerage platforms, and choosing investments with low expense ratios.
Okay, so we're making the decision to become an investor, saving automatically, and being mindful of fees. What's step 4 on our journey to financial freedom?
Step 4 is all about getting the right advice. Robbins argues that having a trusted financial advisor can make all the difference in achieving your financial goals.
But I thought he was pretty critical of financial advisors earlier.
He is, but he makes a distinction between advisors who are truly looking out for your best interests and those who are simply trying to sell you products that generate the highest commissions for them.
Oh, right. He's a big proponent of fiduciary advisors.
Exactly. A fiduciary advisor is legally obligated to put your interests first ahead of their own. They're required to provide advice that's in your best interest, not their own, and they can't receive commissions or kickbacks that could create conflicts of interest.
That sounds like a much better model. But how do we find these fiduciary advisors? Are they hard to come by?
Robbins actually provides a directory of fee-based advisors in the book, and he outlines 5 key criteria for selecting a trustworthy advisor. He emphasizes the importance of asking tough questions, understanding their compensation structure, and making sure their philosophy aligns with yours.
That's incredibly helpful. It can be so overwhelming trying to navigate the world of financial advice. So having those clear guidelines is really valuable. Okay, so we've got our financial advisor in place. What's next on our path to financial freedom?
Step 5 is all about investing, like the 0.001%. Robbins argues that we can learn a lot from studying the investment strategies of the ultra-wealthy.
So it's about getting a peek into the playbook of those who've already achieved massive financial success.
Exactly. And this is where those billionaire interviews we discussed earlier come into play. Robbins shares insights from his conversations with titans like Carl Icahn, Ray Dalio, Warren Buffett, and others, gleaning their strategies and philosophies for building lasting wealth.
That's amazing access. What are some of the key takeaways from those interviews?
Well, one common thread is the importance of asset allocation, which we talked about earlier.
Right.
These billionaires all emphasize the need to diversify their investments across different asset classes, to mitigate risk and potentially increase returns over time.
Right, that whole don't put all your eggs in one basket thing.
Exactly. And they also stress the importance of having a long-term perspective, not getting swayed by short-term market fluctuations, and staying focused on their goals.
So it's about being disciplined and patient, not getting caught up in the emotional roller coaster of the market.
Precisely. And they also emphasize the importance of being a contrarian, not following the herd, and being willing to go against the grain when they see an opportunity.
It sounds like it takes a lot of courage and conviction.
It does. But these billionaires have shown that it can be incredibly rewarding. They've built their fortunes by thinking differently, taking calculated risks, and staying true to their investment principles.
It's inspiring to see how they've defied conventional wisdom and achieved such extraordinary success.
Absolutely. And while we may not all become billionaires, we can certainly learn from their approaches and apply those principles to our own investing.
Okay, so we're learning from the best. What's step 6 on our journey to financial freedom?
Step 6 is about creating a lifetime income plan. Robbins argues that it's not enough to simply accumulate wealth. We also need a strategy to ensure a steady income stream throughout retirement, regardless of market fluctuations.
That makes sense. We don't want to outlive our savings or be forced to drastically reduce our lifestyle in retirement.
Exactly. And he explores a variety of options for generating lifetime income, including annuities, rental properties, dividend-paying stocks, and even businesses that can continue to generate cash flow, even after you're no longer actively working.
So it's about creating multiple streams of income that can provide financial security throughout our golden years.
Precisely. And he emphasizes the importance of starting early and building these income streams gradually over time.
Okay, so we're investing wisely, managing risk, and creating a lifetime income plan. What's the final step on our journey to financial freedom?
Step 7 is about accelerating your financial freedom through investment strategies only the wealthy know and use. Robbins delves into some more advanced strategies that can potentially turbocharge your wealth building efforts.
Ooh, this sounds intriguing.
Yeah.
What kind of strategies are we talking about?
Well, he talks about things like private placement life insurance, PPLI, which can offer tax advantage growth and tax-free withdrawals, and asset protection strategies that can help safeguard your wealth from lawsuits and creditors. He even explores strategies for investing in real estate, precious metals, and other alternative assets.
This is getting into some pretty sophisticated territory. Is this stuff only for the super rich?
Not necessarily. While some of these strategies are more complex and may require a higher level of financial expertise, many of the underlying principles can be applied by anyone who's serious about building wealth.
So even if we're not billionaires, we can still learn from these advanced strategies and potentially incorporate some of them into our own financial plans.
Absolutely. And Robbins provides a wealth of information and resources to help readers explore these options and determine which ones might be right for them.
This is amazing. I'm feeling so much more empowered and knowledgeable about my financial future.
Me too. And we're not even done yet. There's one more key concept from the book that I think is crucial for achieving true financial freedom.
Oh, I'm all ears. What is it?
It's the idea of the dream bucket.
The green bucket. That sounds intriguing. What's that all about? The dream bucket. That sounds intriguing. What's that all about?
It's all about identifying your biggest dreams and aspirations, those things you'd love to do if money were no object.
Okay, so it's about thinking big and letting our imaginations run wild.
Exactly. Robbins encourages us to break free from those limiting beliefs. You know, the ones that tell us what's possible and what's not. He wants us to tap into our deepest desires and create a vision for a life that truly excites us.
I love that. So it's about connecting our financial goals to a deeper sense of purpose and fulfillment.
Absolutely. And he doesn't just leave it at vague aspirations.
Oh, yeah.
He provides a framework for categorizing those dreams based on their cost and time horizon, short-term, mid-term, and long-term.
So it's about turning those dreams into concrete goals that we can actually plan for and achieve.
Exactly. He encourages us to break those big dreams down into smaller, actionable steps and then start taking those steps one by one.
Okay.
He believes that by having a clear vision of what we want and a plan to get there, we unlock a level of motivation and focus that can really propel us forward.
It's like having a roadmap, not just for our finances, but for our lives.
Exactly. And it's not just about material possessions or luxury experiences. It could be about spending more time with loved ones, pursuing a passion project, making a difference in the world, whatever truly lights you up.
I'm starting to see how the dream bucket ties into Robbins' overall philosophy of mastering more than just money. It's about creating a life of abundance and fulfillment, not just a fat bank account.
Precisely, and he reminds us that achieving those dreams often requires more than just financial resources. It also requires courage, perseverance, and a willingness to step outside our comfort zones.
So it's about embracing challenges and seeing setbacks as opportunities for growth.
Absolutely. Robbins emphasizes that the path to financial freedom and to achieving those big dreams is rarely linear. There will be bumps along the way. But it's about having the resilience to bounce back, learn from those experiences, and keep moving forward.
This has been such an insightful deep dive. I feel like I've gained a whole new perspective on personal finance and on life in general.
Me too. Robbins has a way of weaving together practical advice with powerful insights into human psychology and motivation.
It's not just about the numbers, it's about understanding ourselves and what truly drives us.
Exactly. And I think that's what makes his work so impactful. He's not just teaching us how to make money, he's teaching us how to live a richer, more fulfilling life.
Well said. And I think you'd be thrilled to know that we're taking these insights and using them to create our own dream buckets.
Absolutely. So what's going in your dream bucket? What are those big, audacious dreams you're going to start pursuing?
That's a great question. And I think that's the perfect place to leave our listeners. What about you? What are your financial dreams and goals? What steps can you take today to start turning those dreams into reality? That's your homework. Happy dreaming and happy investing.